Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're going to be discussing some potential tradable opportunities in terms of how you need to position yourself to be on the right side of this market. And what is going on in our economy right now, I think it's pretty prudent to identify the necessary sectors that are seeing major technical breakdowns and a lot of weakness as we progress through this earnings season. So right now, in this video, we're going to be discussing the industrial sector and also the transports and what is going on in our economy right now, because I'm a firm believer the industrials and the transports are really the backbone of this economy. And if we see weakness in industrials and transports, that often precedes weakness in the overall economy. So looking at the industrial ETF here, XLI is on a massive technical breakdown. Today, we finally got a close below this orange trend line, which is the 1-year moving average, which means now we're trading back below the 365-day moving average, which is an extremely bearish move to the downside. There's a few times in this overall consolidation pattern that we've pierced through that level and then recaptured it, pierced it again, recaptured it, pierced it again, recaptured it, and now we've sold off again. And it just so happens to be on an extreme amount of volume. And there's some unusual options flow activity. Basically, there's a whole host of puts betting against the XLI industrial sector. Definitely a lot more puts coming in versus calls. So pay attention to the sector, because if we get continued weakness, this could be very telling for the overall economy. And one trend line I'm going to bring to your attention is this is the main trend. If you lose this trend over here, connecting your major pivot in November to your major pivot low in March, that is the line in the sand. If this ETF loses that level, this is going to be a primed candidate to short to the downside. And there's a lot of individual names to continue to look at throughout this particular sector. So just pay attention to that. And then even if you move along to the Dow Jones Transports, the DJT, this is one of the most bearish sectors I've seen. You have an astonishing, and I mean an astonishing head and shoulders pattern here that is playing out. Basically, you can see that we are getting this lovely, very symmetrical pattern here on the Dow Jones Transports, and it is actually finally triggered today. If you draw the neckline like this, you can see that the Dow Jones Transports finally triggered that bearish formation, and now it's on watch for a confirmed breakdown. But this pattern, measured move downside, takes you to target 2. There's going to be bounces along the way. I do have a target 1 as a very likely probable outcome. This one's less probable, but certainly on watch for a massive technical breakdown. The Dow Jones Transports are not looking healthy. And again, they are the backbone of the economy. If you look at UPS, massive breakdown. This is actually coming into some good technical support to day trade. A little bit lower is even a good swing tradable opportunity, but a massive technical breakdown from the mean trend that it has been having. And look at that. You pierced the trend over here and you confirmed to the downside. Heavy volume yet again. These sectors are struggling and definitely in for a whole host of trouble. Even if you look at the IYT, that is on the near term horizon of triggering this beautiful head and shoulders pattern, and it was actually just saved today. So maybe you get a bounce before you pierce that level, but the volume, the sell-off, this left shoulder, this head, this right shoulder, now trading below the 200. Watch out below, because this market is signaling some pretty poor fundamentals when you remove the overall technology sector from the market. So definitely be paying attention to some of these leading economic indicators, because if they're showing weakness, that likely means the economy is going to show weakness in the near term, likely because those bigger interest rate hikes from roughly 12 months, 10 months, even 8 months ago are starting to filter their way through the economy. And definitely pay attention to some of these sectors for potential short opportunities, because they will be certainly very profitable if they continue these downtrending patterns. And this likely is breaking down the industrials and the transports because of the weak PMI and manufacturing data that we have been getting. So pay attention to that PMI data, because I do believe we're firmly in that contracting territory. Things are starting to decline at a sharper rate, and if that trend continues, we are starting from a point where the Federal Reserve is tightening, still tightening, and PMIs are in contraction already. So therefore, we could be getting early signals that they are over tightening in this market. Take care, everybody, and we'll see you on the charts tomorrow.